time to press the record button. Jeremy, Wolfe, and I, man, how long? When did you and I connect for the first time, Jeremy? Was it like May-ish?
Yeah, that sounds right.
Okay. And Jeremy and I have a common bond because we both hold a PMP certification. So we talked a lot about that, which was kind of fun. And Jeremy is going to share with us for the next 45 minutes or so about a little bit of what he does in terms of investing and day trading and swing trading, which is a term that I didn't even hear about before today, crypto, as well as some Q&A at the end. And this is part of the digital learning community that ihelppastorsgetjobs.com does. So David's a part of that community. We meet every other Friday typically and have tip topics like this. So if you wanted to join up with that, I think that link should work, even though it's very, very ugly. But without further ado, hey, Jeremy, go ahead and kick us off, brother.
Thank you so much, Eric. I appreciate you all for being here and for listening to me. So as far as credentials, I've got these are my qualifications for talking about this today. First of all, I'll give you three. I live this. I invested $750 this morning. And so my second qualification is in my youth, I worked for 5 years in the financial services industry and accumulated some securities licenses at the time. I let them lapse because I moved on to other things, but I always kept that on my radar as someday I'm going to tackle this with all my might. And then the third thing is last night, they had the Field of Dreams game in Dyersville, Iowa. I live 5 miles from there, so I'm closer to heaven than you are. So those are my qualifications. And so with that, I'm going to share my screen if you don't mind. And I've got a presentation for you. See if I can get to the tab. Okay. So investing for bivocational pastors. As Eric mentioned, I'm a PMP. In addition to, I pastor 2 churches, and they're rural churches, kind of the opposite of what maybe you guys do. My churches are over 100 years old, well established. One of the challenges that we have, Eric, your story really rang home because I've got those types of folks too. Unfortunately, sometimes they will enmesh themselves in the church so deeply because they'll get involved in so many things. So they're really difficult to deal with it. When you've got someone who's been doing that for 30, 40 years, it's really tough. So I feel for you with that challenge. So my story is before I became a pastor in the fairly recent past, I had started, like most people do, volunteering in churches and working my way into the role. But originally I was in management, both on the customer service side of things. And then also I got into IT and IT management. And, but as a young man, I spent 5 years in the financial services industry and I did it. It was kind of a mercenary job, to be honest with you. I worked there because it was a Fortune 500 company that was closest to me that offered good pay and benefits. And I was a young husband and a young father. And so I did it and I was afraid of finances, but I was forced to learn it. And that's been a big blessing to me. And one of the other reasons that I became on this path is, and this is a seminar in its own, but a few years ago, I was working in my job and I felt okay, but I was like, this is not what I'm called to do. I'm called to do something a little bit more. And so I wrote out a contract, for lack of a better term, or an extended prayer of what I wanted my life to be, because I had felt the call on ministry. And I said, okay, God, I will do this, but I'm going to be a bivocational minister. I didn't even know what the term was at the time, but I said, I'm not doing that thing where the people run you out on a rail because because they think you live in too nice an apartment or whatever. I'm going to do this a different way. And he has honored that. And so what he did is he pulled me out of that job, got me into some other things and got me into ministry. And so As I'm at a juncture point where now is the time to really get back into investing, and I haven't been sitting still, but over the years I've been accumulating knowledge and kind of keeping an eye on the game and ready to get into it. So my goals for the future are to hit I want to hit $1 million within the next 5 years. Hopefully I can beat that. And then also I manage a small little seed fund with a couple other guys who have similar goals. And so I'm kind of the money manager for that, for our little group. And so I hope to get that to a similar place or beyond. And I feel really confident about getting there. So investing is a wonderful complement, whether it be bivocational ministry or any ministry. It's relatively passive income, and so it's going to help you do those things. And hopefully you have the, you have the problem where someone it complains about the size of your house or apartment or whatever. That's kind of a good problem to have, that if you're taken care of, it really backs you up in so many different ways if you're financially taken care of. Because if you get there investing wise to where you're almost doing ministry, not as, I won't call it a hobby, but as a volunteer activity almost, then that's a really great place to be. So here are the barriers to that. Investing is intimidating, and this, I'm a little bit older, so I remember these days a little bit better. But in the past, investing had lots of gatekeepers. It was a very closed world, and it still is for many people mentally because of those gatekeepers. And in the past, if you would have gone to maybe the early 90s and you turned on a Sunday morning TV show that was like, brings on like Meet the Press kind of stuff, you'd see all these commercials and they present all these financial firms and investors as very somber rocket surgery. I'm smarter than you, I'm more somber than you, and I dress better than you, and I'm the only one who can invest money. Don't even think about it. And so even today, many are afraid to go near it, despite the absolute flood of information and opportunities that are out there. So investing has the potential to create, and I listed that as passive income, but I'll call it relatively passive income that grows and provides with little effort. Once that is in motion, this can potentially allow you to engage in ministry with peace of mind and less stress. Even if you know something is growing and you're not really, you don't have to, it's different than a job to where you're, punching the clock and doing everything every minute, every second of the day. If something's growing while you're writing your sermon and preaching or doing whatever you do, that's a pretty good deal. So there are many, many ways to invest, but I wanted to talk about the ones that are most fitting for pastors. And I'm going to start probably from the toughest to the easiest. So the first one is day trading. That's what that one kind of gets the most press because it's the most exciting. It's like you're there at your computer when the stock market opens, and it's you're on there all day and you're constantly trading, winning and losing throughout the day. There's a lot of potential for wins, but it's really difficult. It takes all your time and effort and research, and there's a lot of risk involved with it. And so I don't recommend it unless you are just kind of a natural born trader and you really want to do that, and that's really your passion. I don't recommend it. Options trading is something that I'm learning right now. It's not rocket surgery, but it does take some time to learn. And so I know I'm moving from basic to an intermediate with it, but I haven't really employed it yet because I want to be really, really strong in it before I start risking money on it. It's so that one has a learning curve to it, but it's something that you could potentially do. The next one is super in the news is crypto. The great thing about crypto is that it's relatively easy in some sense. You can, anyone can go buy some Bitcoin or some of the top crypto things, but also it's such an emerging field that I don't think anyone knows for sure about some of these coins and instruments, whether they're going to be here in 10 years. I think Bitcoin will. I think Ethereum will. I think there'll be probably something that is emerging now or has not come up yet that'll be big in 10 years. But other than that, I don't know, and no one knows. So it's pretty interesting, but it's something that I don't think you could just invest in crypto all the time. At least I would not at this stage in life. The next one is the easiest one, I think, is long-term investing. That's where you look for blue chip stocks and you invest and you just hold. That's the easiest, especially if you have a steady stream of income. If you, let's say, if you're in a fortunate place where you have like $500 a month that you can dedicate to investing and you're a ways away from retirement, this is a great way to do it because you put something in a stock like Coca-Cola that returns dividends and grows every single year. It's easy money. But the last one that I wanted to talk about, which I think is the most interesting and the most like church planting, is swing trading. So here's the advantages and disadvantages of each, and I just kind of talked about this a little bit already, but day trading can provide fast income, but it's huge time investment and risk. Crypto, huge upside, but substantive risk and volatility. The long-term investment is the safest. Find companies that you like, buy stock and hold it, but the results take a long time. The options can provide income in all types of markets. That's one of the reasons I'm moving to it, because when you have a recession or something like that, you want to be able to, you don't want to have to wait for the next bull market, the next surge to make money. And then swing trading, I think, is the best fit for a pastor, especially a pastor who believes in things like bivocational ministry or church planting, because to me, it's very similar. Swing trading is loosely defined as buying a stock or other financial instrument for a limited period of time, at least a day or more, for the purpose of taking a limited profit. So it's not day trading. It's, and I'll give you an example. Let's say a stock like Apple is currently undervalued. I may buy a share or shares knowing that the stock is likely to rise because I've seen the history of it time and time again. It does this little pattern. And I also know Apple isn't going anywhere. It's not a startup, obviously. Once it hits my target price or stops rising, I sell. And that process for a swing trading trader is usually days, weeks, and sometimes months, but not often. Usually if you're going to take a ride on a swing trade for months, it's because it's performing better than you thought. Swing trading is much easier than day trading because you can start a trade and casually watch it over time. So let's say, take my Apple, for example. Basically, all I'm doing is I'm buying it at a price, and then I'm just keeping an eye on that price, and I may set up an alert for it. Hey, tell me when this hits this, or if it drops below this. And that's really all I'm doing. I'm not constantly watching the market. So it's a huge advantage. And even if I'm running 5 of those types of trades, it's not taking up all your time. So here's some steps to success, in my opinion. Successful swing traders, they value percentage over dollar amounts. Dollar amounts are kind of emotion. Let's say I pull off my Apple trade and I just do really, really well. And I'm really excited about the amount of money that I got. In reality, I'm more interested in the percentage that I got, because over time I want to look back at my track record and say, this, I grew it by this percentage, not the dollar amount, because the dollar amount can kind of fluctuate. What I'm interested is that percentage. Money management. I don't want to, if even if I'm real confident about Apple, I don't want to put all my money in that trade. I want to split that up into lots of different trades. And then I also want to cut my losses if Apple has some weird thing where, they get sued or whatever, and then they start dropping. I want to be able to get out of that trade pretty quickly and without losing my shirt on it. I don't want to be stubborn and say, I really like Apple and I'm going down with the ship because, and put all my eggs in one basket. We don't do that. Stoicism, and I think I spelled that wrong, but stoicism is very much looking at everything objectively and keeping the emotions out of things. And that's a huge part of investing. Discipline. your rules don't have to be the same as mine. They don't have to be perfect. They don't have to, there's some wiggle room within your rules if you build them in there. But I think it's really important to have those rules and follow your own rules. That discipline is the difference between a good trader and a bad one, because you can go on a really good streak, you can have discipline for a while, but then if you just have an emotional breakdown, you can lose everything all at once. So that discipline, that emotional, mental, rule following discipline, as well as the discipline of putting in the work, is really what drives a trader. Statistical analysis is sounds not like a whole lot of fun, and it's not always fun, but what it is it's ultimately studying the history of a given stock or instrument, studying the history of the market to figure out what's going to happen next. You will not always do that, but you do not have a chance unless you learn how to some form of statistical analysis. So a trader needs that. And then the two biggest things that will help you as a swing trader are going to be replication and scale. Okay, I did well on my Apple trade, but can I do that? Can I find another blue chip company and do that again? And does this work time and time again? For the most part, you're going to have quirks where that doesn't happen, but is this a provable system where I can find these patterns, exploit them, and then do that again over and over again? So you really want to find ways to replicate, and there are strategies for that. I won't get into those today, but there's proven strategies for that. And the next thing is scale, which is tied to percentages. If I'm making 5% on a trade, that doesn't seem like much, but if my bankroll has grown over time to something very big, 5% can be really, really big. So as I mentioned, a small percentage can be big. Swing traders value percentage over dollar amounts. I could win big on one trade monetarily, but what good is that to me in the long run? I'm more interested in that consistent percentage, because as my bankroll grows, the percentage is gonna matter more over time. I'd much rather have lots of small, consistent wins over a couple of big wins that fuel my ego. Hey, I'm the smartest guy in the room. I made this amount of money. Look how great I am. I don't care about that. That's gonna destroy me. Money management. It's not casino money. A successful trader limits the percent of their bankroll for any trade. The trader also has a stop loss for every trade based on a percent. So whatever your rules are for yourself, I'm going to get out of every trade when it drops by this. And I don't care what your number is. You just got to have a number and you got to stick to it. So the principles of this are best laid out by Alexander Elder. And I'll take just a second to talk about him. He's going to be in my reference list at the end. Alexander Elder is an interesting guy because he came from he came, I think he came out of the Soviet Union, or one of the countries that were under control of the Soviet Union during the Cold War days. So he came from a place where there was not that kind of opportunity. He got into stock trading, so he has this big picture view that maybe Americans don't have. And he is also a psychologist. So he's really, really great at giving some principles. And I have a book by him that I recommend in the list. But the mental and emotional control and this discipline over controlling your money is really important. I mentioned Stoicism. Marcus Aurelius or Seneca, or whoever your favorite Stoic philosopher would probably be a good trader. A successful trader removes emotion from the equation. Stay away from things that you can't be objective about. Take some time to process wins and losses and look at them from the balcony. Understand that learning a new discipline takes time. And I'll give you an example of this. You may have noticed in the news, AMC, the stock AMC, the movie theater chain. Well, what people were doing is it was a meme stock. So people were driving the price artificially and doing all these sorts of things. And I saw it. I'm a huge movie person. I have an AMC near my house that I'm a big fan of. I thought it was fun. I'm not going near that stock. I'm not getting involved in it in any way. I'm not going to get involved in something that's gimmicky, something that I want AMC to come back, after the pandemic. I want them to succeed. I'm going to stay away from that because I have dog in the hunt, I guess, or a mental or emotional dog in the hunt. And there's just something, I can't be objective about it. And I'll give you another example. I'm invested in a fund called ARKX, ARKX, and it's run by a woman named Kathy Woods, who has a tremendous track record. And when she creates these mutual funds or ETFs, they always go to the top. And she created a new fund based on space exploration. I invested in it, but only in limited amount. I'm a space nut, so I'm drawn to it for that reasons. But I also looked at it objectively and said, if this was about something else, if this was about some other emerging field that I'm less interested in, would I invest in this? And the answer was yes, because of my trust in her and her track record. Right now, it's like $15 a share. I know in 7 to 10 years, it'll be at least $100 a share. So that's why I got into it. Then now the space exploration is kind of fun, but the stoic part is the reason why I'm in that. So discipline. Trading is not a get rich quick scheme. A successful trader is disciplined by following the rules that they've created, whatever your rules are for yourself. I think that's less important than, hey, you're doing that wrong. More, it's like, do you have a structure and are you following it? They're disciplined in their analysis and research. They get better in the same way that anyone gets better at anything, day by day and with discipline, atomically. And I'll come back to that. Statistical analysis. The future tends to repeat itself, just as with anything. Statistical analysis, studying the past and patterns to predict what may or may not happen in the future. A successful trader can predict the future more often than not. And that doesn't mean everything, obviously, but when you're looking at a chart and you've seen the same pattern over and over again with the same stock and with similar stocks, more often than not, you're going to predict it. The discipline takes time and is ongoing. So replication, you did it once, can you do it again? A good trader can duplicate wins over and over again consistently. These wins can be small. If you can win in one big trade, so what? Can you do it again and again? An ocean starts with a drop, and I want to talk about scale and compounding. A good trader loves percentages, replication, and compounding. And I want to show you something. This is kind of a 20 steps to from $1,000 to 2.2 million, and hope that you'll find this interesting. I got to move to my other tab. Can you see that okay? Okay. So what this is this is a real simple timeline, and this is a scenario. Let's say that I have $1,000 to invest, which is a pretty good indicator of someone who wants to dip their toe in investing, and they find $1,000 to sock away, and you might think that's not very much money. How am I going to get anywhere with that? But with swing trading and with percentages, let's say if you told me, if I told you I can take your $1,000 and turn it into 1,500 within 6 months, you would say $500, that's not very much. I don't know if I'm interested in that. But what I'm interested in is the percentage. I'm creating through my multiple trades that I can duplicating and scaling over and over again. I'm creating small wins to get to this 1,500. And let's say it takes me 6 months to do it. Well, okay, so now I've got 150% return on my investment, 1,000 to 1,500. Again, $500 is not that much. But let's say I duplicate it again. I give myself 6 months. Oh, you went from 1,500 to 2,250. That's not much. Okay, give me another 6 months. Give me another next 6 months. And then now I'm into 10,000. Now I'm doing the same rate of return. I'm to 17. Now I'm to 25. Now I'm to 38. Now I'm to 57, a couple more jumps. Now I'm into almost 500,000. And then down here, you get to 2.2 million. I have a similar chart for myself. I work on 3-month increments, and these are my goals. In some cases, I'll make quantum leaps because I have some investments that I know will take off in the next couple of years, but this is my goal, is to grow consistently. So you could go from $1,000 using this kind of method to 2.2 million in under 10 years, just under 10 years, yeah, about 10 years, with 20 leaps of but these little compounding leaps of getting a 50% return or 150% return, how you look at it. And it doesn't seem like much in the beginning. I went from 2250 to 3375. Oh, this is going to take forever. But so I have a chart similar to this. Mine is much faster. I'm a goal setter. I have to put it on paper for it to happen. So, but that might seem kind of silly to you, but one of the things that struggles in investing, you think I'm really far away from doing anything with this. Not really. If you can find a way to consistently replicate, duplicate, and scale, you can get from there to here with $1,000 pretty quickly. And obviously, this is on a 6-month time. I have 6 months in between each leap. Well, you're going to have times where you have a quantum leap in something. Something's just going to take off for you, and you're going to jump over one of these or two of these or something like that. So share that with you, just hopefully for as inspiration and just kind of to show the value of compounding and moving forward. So let me start that. See if that'll play it again. Sorry. Let me go backward. Sorry, guys. Give me just a sec. All right, so I welcome you, if you're interested, to a very new rabbit hole. If you notice, what I talked about today was not a specific strategy aside from the broad strokes. I favor swing trading because I think it's the most practical and the most like church planting and the most feasible way to do it. But this would get you started, especially on the psychology of trading and how to get started, how to get, just like any kind of thing. When you first start reading the Bible, you probably have some familiar with it. When you first start into serious Bible study, you learn all sorts of new terminology and different ways of doing, the way that the Bible speaks. You have to learn that first before you can really dig into that. It's the same thing with trading. It has its own vocabulary, it has its own language, its own little quirks and things like that. But they're not difficult. It's in my opinion, unless you really want it to be difficult. So the first thing I would recommend for a book is The New Trading for a Living by Alexander Elder. He's the gentleman that I spoke about. He talks a lot about the psychology of the training, and he will be the best at helping you set up your approach and your rules. He talks about what kills a lot of traders, but he'll teach you discipline and the psychology of trading. And I recommend that book a lot. And you might even come back to him and say, that rule doesn't quite fit me. So adjust it, adjust it to where it fits you. The next one, also, these are older books. These are kind of classics, if you will. The next one is How to Buy Stocks by Louis Engel. There is one thing you'll find with a couple of these books. They cover principles and they're a little bit dated, but they still hold up really well. So they might talk about things that are a little bit before the computer age, but they've stood the test of time and they'll do a really good job of covering the basics. The next one is not a financial book, and you may be familiar with it. Hopefully you are, but it's Atomic Habits by James Clear. What he talks about, it's a very principled approach to how breakthroughs actually happen. They don't, and it's similar to how I showed you that chart. When you go from 1,000 to 1,500, 15 to 2,250, you think I'm never going to get anywhere. But the way that breakthroughs really happen are little by little, and then you see that quantum leap that happens down the road. But Atomic Habits is really, I think, good, not just for investing, but any kind of discipline that you're working on. It's a really great book. Technical Analysis of the Financial Markets by John J. Murphy. That is when you're ready to get into the boring parts of technical analysis. It's kind of like learning math and things like that. And if you're a STEM person, a science and math person, you might love it. But most of us, it's kind of a necessary evil. But once you dig into it and you learn the essentials, and then you start to see, when you look at a chart, you can see exactly what's going on and you can kind of predict the future. I think this is where it's going. That's the exciting part. The next thing I want to show you is a resource, thinkorswim.com. You've probably seen commercials for it, or maybe you have. But Thinkorswim is TD Ameritrade's product. You do not have to invest with them in order to use it. All you need to do is sign up an account. And here's the valuable thing about it. You can do tons of research on Thinkorswim for free. But the other thing that's even more valuable is that you can do paper trading. And paper trading is like fantasy football. It's like I can make all these trades. I can test out my system and test out my skills. I can pretend I have $1,000 or pretend I have 5,000 or whatever you want to start with, and then just start trading with that money, and it doesn't hurt you. All it does is help you. It's like a training ground. And so you could do that. Let's say, I might not be ready to do this for a couple of years. Well, you could paper trade for a couple of years while you study, and it doesn't hurt you. The only thing it will do is help you, and it'll just help you to learn. So that, but Thinkorswim has a lot of very great resources in there as well, education and things like that. The next link is a YouTube link. It's a study for statistical analysis. It's an hour and a half that covers the basics of that. So that is a representative of what you'll find on YouTube. You could learn everything for free and then some. The only hard part is sifting through the hyperbole. Did I say that right? Everyone wants them to click on their link. So they'll say how to make $1,000 every month or whatever their game is. Well, sometimes that's garbage, but sometimes underneath that, they're showing you something real, a real technique on how to learn and how to learn in the markets. And a lot of them are trying to sell their products. They're trying to sell some more education. And some of them are good and some of them are less than good. But YouTube is free last time I checked. And so you can watch all the videos that you want about these subjects to learn. And you'll know the difference between a good channel and a bad one and that type of thing, and which ones aren't very great. But and then once you start down that, you'll start to find your own rabbit holes. As I mentioned, I'm trying to learn about options right now. It's really appealing to me. You might say, I really love crypto. I really want to learn more about it. And that's emerging. So that would be a really exciting thing to learn. But this is, I think, a great starting place. And then you could find your own rabbit holes. Maybe you just love stock trading. You just are a stock person, and you could find all the stuff you could ever find on that. But the reason I did this presentation is just as a starting point, hopefully, to kind of get into that world. And I guess my next thing would be any questions that you might have.
Thanks, Jeremy. I really appreciate your time. I'll kick us off with a question. So I've never heard that philosophy before of like, pick a percentage, and if it goes above that, sell. If it goes below that, sell.
Yeah.
That's really smart because I've done, trading. I didn't even know I was doing swing trading, but I was.
Yeah.
I'd buy like a stock and be like, okay, it was 80, now it's 100. Let me get rid of it. But there was always like a little part of me that was like, but it could go to 105 or 110, and the opposite is also true, right? It dropped to, it's a $100 stock, it drops to 80, and you're like, oh gosh, let me just hang on to it. So I'm kind of curious, like, it'll take $100, for example, $100, one stock, you buy it. Like, what would you say is your percentage of, like, if it goes above this percentage, I'm selling. If it goes below this percentage, I'm selling. Do you have a finite number like that?
I have a number. So what I usually do is I'll have a percentage for a stop loss. That's the first thing, is if it goes, okay, your stock is valued at $100. I'm gonna find a place. I don't want to go below $95. Once it hits that, I'm gonna sell it. But as far as it going up, as long as I see that trajectory going, I might hang into the swing, right? Now, if it stagnates, I'm gonna say, and my goal was 5%, and it stagnates at 7%, and it just kind of sits there, and and I don't want to take the ride down, that's when I'm going to get out. But if it keeps going, I don't know why you'd get out of a trade that's still rising, right? So, but usually the problem with a swing trade is stop loss. It does something different than what you thought it was going to do, and it's pulling back, and now you're losing money. Or the other thing is where it just stagnates or it has a slow loss, and then that's when you want to get out. But yeah, I have numbers for that. Usually I like to take 5% on a trade, at least 5%. And then, but I'm not going to stop it if it's on a rocket cruise. But then if it's also ascending really fast or even gradually, I'm going to keep an eye on that, because stocks don't generally, if you're doing a swing trade, they don't generally constantly accelerate forever. They usually do some sort of, even if they're on a really great run, they do a pullback, right? They're going to do a pullback, and then they might hang there for a while in that where it's pulled back to before they decide to go up again. And if you're long-term investing, that's fine. You just hang in. But if you're swing trading, you just want to ride that. But yeah, that's what I'm usually going for is that percentage. So if it hits 5% and then maybe it gets to 6% and then I see a pullback, that's when I'm like, all right, I got what I wanted. I'm going to get out. But if it goes to 20%, I'm not going to argue with it.
You're gonna hang out for sure. Okay, that makes
Yeah.
sense. Yeah, it's just for me, like my experience has always been the emotion, like you said. I get too excited and then, or I get too scared, and just to have something in your head before you even press the buy button is really helpful.
Yeah, and that's the thing is we're all subject to that, and we can all get, there's no one who's perfectly stoic and perfectly robot or anything. But if you have those rules set up that help you to, if you set up your rules and you can use the advice from and the reason I leave that flexible is because I've seen successful people, they use that same principle, but their number is slightly different because their risk tolerance is different, so yeah, that's okay. But yeah, you gotta have rules to live within, or else you're just kind of riding on emotion.
Awesome. Thanks, Jeremy. Anybody else have a question for Jeremy?
Yeah. No, Craig, you go.
Thanks, man. Yeah, all this is super new to me. Yeah, like day one new. But practical question you may have already addressed. How much money would need to be set aside to make it worth, getting into and trying out, in your opinion?
Well, the reason I use that chart with $1,000 to 2.2 million is because I think that someone can start with a small amount. I think $1,000 would be a good beginning, but if you're going to do that, the smaller the amount, the more you need to combine that with homework and knowledge and paper trading and stuff like that. So, I think I don't think it's crazy just for someone to start an account with $1,000 or $1,500, something like that. But at the same time, you have to have the understanding of what you're dealing with. You're dealing with that small seed. You can definitely grow that into a very big tree, but it's going to take some time. Obviously, the more you can invest and the more frequently you can invest, the quicker you're going to grow things, or you can grow things. But it's not crazy for someone to take $1,000 or $1,500 and turn that into something more. It's just got to be combined with a lot of homework.
Gotcha. Yeah, makes sense.
So I do current investing with I have a Roth IRA. So I'm more in the long haul game with it, with all of that. Is there a different type of software company or account that you recommend for swing trading? It's obviously like right now, my IRA, I'm not touching for many, many decades. However, like if I want to invest and like the goal is for me to eventually have enough money to pay off a new roof in 5 years, 6 years. Like obviously I can't do it with my IRA. What do you recommend?
Oh, sure. There's a few. And I actually have all three of these because, and the reason why was
good testimony of it.
Yeah. There's a lot of emerging ones. I'll start with the easiest one. Robinhood is the most accessible. It's the easiest visually, and it just kind of works easily. But it's a little bit behind the others on terms of research and things like that. It's not lacking in those things, but of the three, that would be the easiest one. You're going to have the most, from a newbie perspective, it's the most easily accessed visually and everything. Webull, if I was going to spend a lot of time doing statistical analysis, and day traders just particularly love it, Webull um, is really great. And then the third one is TD Ameritrade, which has Thinkorswim, and they have a lot of tools on there. I use all three, partly because of crypto. When crypto first started, the old school investing places were a little slower to adapt them, and so some of them have this, some of them have that, but also it's been a great test drive of all those tools. Of the three, I think Webull's probably the strongest, but and I say that in part because you can use Thinkorswim without having an account with TD Ameritrade. But yeah, any of those three, and there's others too.
Okay.
But yeah, I think just starting a brokerage account, even throwing $100 in there, that's a start, But I don't think there's too many bad ones anymore, because they're one of the great problems they have is they're competitive, and so they're trying to. The world has opened up, and they know that they need to serve their customers. So even if one is lacking in a feature, they won't lack it forever.
Gotcha. No, that's very helpful, because I spend a lot of attention to what I do right now with my IRA.
Yeah.
But I have a couple years experience with that, but to move it into more of that short-term stuff like you were talking about, that's very intriguing.
We have about 1 minute to go. Chris, I know you're driving, but do you have any questions? I want to make sure you have a chance to speak. Maybe Chris can't hear us. All right, Craig or David, anything else you want to throw at Jeremy before we let him go?
I don't think so. I appreciate it. It's helpful. Like I said, day one, but it's never too late to get started. So I appreciate it.
Absolutely. There's my contact info if you ever have any questions or anything you want to, and Eric, I'll give you this PowerPoint if you like.
Yeah, do me a favor, Jeremy, reshare your screen, because I stopped your sharing for the
sure,
the Q&A part. But yeah, that's really good. So you can get in touch with Jeremy and the work that he's doing. And I'm just a big believer, like, even if it's $25 a week, even if it's $10 a week, the best time to start is now. Or actually, let me go backwards. The best time to start was 10 years ago. The second best time is today, right? And
yeah.
And even if you just said, listen, I don't have a lot of extra income, but I got $40 a month I can put into something, go ahead, right? What else are you going to do with it? Buy lunch at Chipotle or Chick-fil-A? Like, it's better to invest it for the long term. So there's Jeremy's email and his phone number. Man, thank you so much, brother. And one last thing, I know we're about overtime, and do you have another meeting at 1, Jeremy? Do you got 1 minute?
I got a minute or two.
Tell us about, like, you mentioned this when we were talking before, about like living off your passive income and what that looks like. I think that's a very new concept for pastors.
Oh, sure. So my goal with this is to build mine to a point to where now I'm tied to a denomination. So one of the advantages that I would have would be to stick with the denomination and maybe stay on the edge of it without, so what I would like to do is once I grow mine to 1 million or more, I might think of, okay, well, I'm not gonna pastor a traditional church anymore. I'm either going to be an interim pastor, or I'm going to be a church planter, and I'm going to do that on my own terms. And because maybe I've got $1 million set up or more, or whatever the case may be, whatever you're comfortable with, my stuff is paid off because I've liquidated part of it to pay off anything that I have hanging out there, but also I'm living off of it. I'm liquidating parts of it, or I'm buying stocks that provide income every month. And then I'm just kind of pastoring stress-free. And so, like, if you're in a church planter environment, that's the big thing, right? Because you don't have money coming in necessarily. Either your denomination or whatever group you're tied to has to fund you, or you have to work another job, and that, or whatever the case might be, until you build that up to a certain level. And yeah, the only way that you can, so that's how I envision doing it, is where I build up to where now any money that I get from preaching is just a compliment.
Awesome. I love that. I mean, wouldn't that be a dream for all of us, to be able to pastor and have a passive income that funds our lives, and be able to serve as we feel called to. So that's why I wanted to have Jeremy come on, because this is part of, my vision of seeing the future of church leaders without those burdens and stresses of money. So thank you all for making the time. I wish you all a great weekend. Jeremy, thank you again, brother. We really appreciate you taking the time today.
Thank you. God bless you all.
God bless you guys. See ya.
You too.